Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is October 31st, 2023. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss franc. Looking at this chart, what gets my attention is this move to the upside here. Took the price back above the 200-day moving average in trading yesterday. What do? We found support against that level and rotated to the upside. Now the gain was modest, and we closed just a little bit off of that level. And in trading here today, the price did come down in the early Asian session, and then in the early the late European morning session, back down toward that 200-hour moving average. But each of the times we found support buyers against that level and pushed the price to the upside. The last few hours have seen a surge to the upside in the dollar versus Swiss as the buying in the U.S. dollar has kick started in the New York session. That has taken the price above the 50% retracement of the move down from the October high. That's this high right here to the October low. That's this low right here, which, by the way, moved below the 100-day moving average briefly before rotating to the upside. So the 50% comes in at 0.90658. And as you can see, we're currently trading at 0.90634, just below that level after reaching a high around the 75 level on the top side. So we are having some digestion problem after the sharp run to the upside over the last few hours, where the market is saying maybe it should slow down a little bit here. Although yields are higher in the shorter end, with the 5-year up 2 basis, or the 2-year up 2.8 basis points. The 5-year is only near unchanged, and the longer end is down on the day. So this dollar buying is probably as a result of the employment cost index, which saw a greater than expected gain. That the consumer confidence also a little bit better than expected at 102.6, but it's still lower than last month's 104.3. So, mixed data. We have the FOMC tomorrow. Dollar buying ahead of the FOMC. We have the we'll see what happens. But the 50% retracement at 0.90658 is going to be a barometer for traders in the short term. If we're able to stay above that level, look for this swing area up here near the 0.9084 to 90 level. It starts back here where the market found support buyers. We came down into that area and found price waffling back and forth here before finding a ceiling through here, moving lower. We returned back to that area here and here before again moving lower. And in trading here today, we are approaching that level. So be aware of that level on the top side. That'd be if we're having trouble here near the 50% retracement, we might have trouble there as well. Although it's tough to pick a top, but nevertheless, these technical levels tend to find their levels and attract some selling interest, or at least from profit-taking perspective. On the downside, it would take a move back below the high price from yesterday's trade. That level came in at 0.9048. Move below that level and look back toward the 38.2% retracement at 0.90237. So there's a technical look at the dollar versus Swiss franc after finding support against the 200-day moving average and pushing above the 50% retracement and trading here today. Good fortune with your trading. Bye-bye now.